Assalamu alaikum and very good afternoon or from the different times. We have three speakers for this session. Uh, and welcome, Dr. Mohammed Quresin. I can see you now. We're waiting for Dato Jamelah. I'm not sure whether yeah, okay, she is there. She has been waiting patiently because the earlier session overshot by 15 minutes and therefore. Okay, thank you. Okay, good. Now that the three speakers are around, we can start the session. We have about an hour. Earlier, I thought we had an hour and 15 minutes, but since the earlier session took a little longer, so it's fine. We have three speakers, so not as many as in the other session. So you can still have a luxury of at least 12 minutes each to provide your input for this session. The title is a very, of course, wide title and something that is very passionate to me. It is called The Evolution of Islamic Finance, Fintech, Digital Currency, and the Future of Islamic Finance. Since 1989, that's when I was thrust into the field of Islamic banking when I became the CEO of Dalla Al Baraka Malaysia in the year 1989, and ever since I have had the opportunity and I would say God's grace to mix very closely with two eminent Saudi bankers, multi-millionaires, from whom I learned a lot on leadership as well as humility. One is Sheikh Sulaiman Al Raji, the founder of the Al Raji Bank in Saudi Arabia. The other one is, of course, the late Sheikh Kamel, with whom I worked even more closely for 20 passed on ago. Coming from the school of Al Baraka banking, I know how passionate Sheikh Saleh Kamil was towards Islamic finance. And the last time I met him before he passed away was in November, and then he passed on in the May the following year. I think it was November 2018, and then he passed on in May 2019. So he told me before, the last message from him directly to me was, Wasihar, the way Islamic banking and Islamic finance is going is not what I wanted. It is really, including my own bank, is not going in the right direction. We are just following the Western model and then modifying it to Islamic finance. So I showed him a cartoon of an wolf in sheep's clothing and said, maybe this is what we are doing. And he laughed at it and said, can I take this slide for my speeches on Islamic finance? I said, yes, of course you can. But then as Allah's will, he did not have much time after that. And his mission of transforming Islamic banks into what he really wanted still remains a dream. And hopefully the successors, people like you, the younger generation, will be able to emulate the real Islamic finance as opposed to Islamic banking and finance in a compliant manner. You know, you can be compliant and fill all the ticks, but are you in just following the passion of what really Islamic finance should be is a big question. And we should think about this deeply and see how we could transform Islamic finance from what it is today to even a better future of Islamic finance, inshallah, in future. And with the advent of new technologies like digital banking and fintech and crowdfunding, some of you are experts in that. I think I hope you will be able to enlighten our viewers who are virtually with us this afternoon on this thing. So I will probably start with Monem. Monem has been in Islamic finance for more than 20 years as well, equally long time as with Dato Jamelah. I'll come to Dato Jamelah after Monem. Monem, if you could take us through your journey. You have been involved in Islamic asset management and mutual funds for a long time. If you can take us through the journey of how Islamic finance, what Islamic finance has achieved to date, and what are the good things, good feel factor you have about Islamic finance, what we could do better, and then with the technology and digital language.
Great, thank you so much. Thank you, Dr. Vasihar, and it's really an honor to have all the panelists with me. I think from my journey, actually been in the field of Islamic investing, part of Islamic finance since 1995, and really it was almost right out of college that I was fortunate enough to be able to join the industry. And so going through the phases of first initially talking to some of the scholars about what it is, and then eventually having what is in the colloquial terms called the Dow Jones Fatwa that came out in 1997, and then onwards from there. I joined Saturna Capital in 2003, and have been with them for since that time. I think when we're talking about technology and digitalization, from an Islamic perspective, I think the journey that we've had in Islamic investing is parallel to the technology part of it. So I would say there's two things that have gone parallel to each other when it comes to Islamic investing. Number one is the understanding of the scholars of what is permissible and what is not. And the second one at the same time, and it's actually very, in my opinion, very integrated in that understanding, is the use of technology to actually act upon what the scholars have given us from the information part of it. So if you think about it, back in the 80s, when I was basically still in primary school, the Amana funds came out, which are in the US, and the first one was launched in 1986, but the discussion about Amana started and forming it in 1984. Now at that time, on one side of it was the discussion of scholars, and they hadn't really come up with this idea of using financial ratios to be able to invest in companies. They were only using industry classifications and companies themselves to be able to eliminate from. And that was a function of technology as well, because although on the exchanges the companies were trading, a lot of the data that they were able to publicly file and those type of things was not readily available. In fact, even until 1993, 1994, I remember, and maybe some people on the panel remember, in the US, there was a binder or 2 or 3 binders from Value Line that was like the most prominent research company, and every month you get mailed one binder of an industry, and you would take out the old one and you put it in the new one, and it's all very paper. And so to be able to go through different industries was a very manual process to do that. As technology improved, as the SEC began to ask companies to be able to input their financial data into Edgar and those type of things in the US and other regulators in other places, then we were able to take the next step, which is, okay, well, the industries are fine, but we can actually do more with the data, because now we have it and we can extract it to look at financial ratios, either on the balance sheet, which is debt to market cap or cash to total assets, or even the haram revenues or haram income from the profit from the P&L statement. So these things happened, during that time. So that was, in my opinion, the leap forward to be able to make Islamic investing better from that perspective. And then I think moving forward, I think now with the implementation of mandates from different regulators, initially it started off with the companies, but now regulators, especially in Europe, are getting involved. They want companies to be able to report on environmental, social, and governance. Now, again, the reporting metrics that are being used, whether it be tons of pollution emitted or how much water you're recycling, all the different things. Thinking about it 20 years ago or even 25 years ago, to be able to go through the data would have been almost very, very labor intensive. And so with the use of technology, there's been a lot more advancement in being able to take the data. Now, if we look at, for example, our screens that we use, we have close to 900 points of data that we extract from all the companies that are publicly traded, and then filter them down into what we feel is going to be valuable. That again could only be done from a data perspective, and I think as the scholars' opinions improved when data was available, I think the next step in Islamic investing, if you want to call it 3.0, would be to be able to incorporate from an Islamic perspective ESG data into our Islamic investing methodology. So I think that's really important. That gets to my first point when it comes to when it comes to technology and digitalization. The first thing is you have to keep in mind is that everybody thinks about fintech and digitalization, those things, and because of it's very, very common, or very, very people don't understand it, but they know it. It's all about cryptocurrency and all of those things, and those are there. But we can take, for example, current companies that are in existence and really improve the back office efficiencies that can be created through software. So that's the first thing, right? Is that all the manual paperwork that needed to be done can be somewhat eliminated by automatic processes. Now, if you think about it, if you the concept of a robo-advisor basically meaning that in the data is input into a software, the software comes out with an asset allocation for the client based on their risk. You can have all the apps and all the robo-advisors out there from a front-end facing from the customer. But if the back end is still being done manually, then you're going to have inefficiencies and a slowdown in the processes, right? So you need to have both on the front end, which is the customer facing, and that's going to be digitized on an app or online. But then also the back end efficiencies have to be there to match those things, or you're going to get too many customers that you can't handle. So there's going to be a quality service issue, and then there's going to be a profitability issue because you're going to have to hire more people to be able to do that. So I think back office is very, very important when it comes to efficiencies and those type of things. Number two, we can look at can be artificial intelligence. Can be used also in asset allocation as well. Just one, and there could be many, many different uses, but I'll just give one just for time purposes. Is that basically all that if we have the data now available in machine learning, we can figure out, for example, the mistakes that asset managers or even your own company has made in the past when investment opportunities came about. You can learn from it, and you can actually make a better decision in the future. So that was number two. And similarly related to that would be data science. And that data science can be used to identify investment opportunities. And it can also be used to deepen your relationship with clients. So for example, in the investment opportunity part of it, I mentioned the idea of ESG filters. And ESG filters, for the most part, actually help to reduce the risk in the investment that you're making. And so once you have that data available, you can actually make better decisions. On the customer facing side of it, you can, in advance, in all different types of market cycles, you can basically learn what type of customers actually make mistakes when your account balances go down. And if those are the ones that actually end up selling when the market goes down, then you can warn them in advance or talk to them in advance to make sure they're not making these key mistakes that are happening. And finally, as a wrap up, all of these things, what they're doing basically is they're creating shareholder value, right? The cost effectiveness of current companies, better learning from AI and from the data sciences, meaning that companies can operate more efficiently, right? More can be put to the bottom line. And then at the same time, new emerging companies come about to be able to not only create the software, but also be able to deliver this in the form to the customer and to the companies for better for better opportunities. So I think again, I wanted to focus on the idea of not everything in fintech is about cryptocurrency and NFTs and all those things. There are real life uses on the back end for companies to use to really take advantage of these and really make more efficiency and thus be able to make more money or create shareholder value.
Thank you, Monam. You spoke about ESG, which is becoming a very important aspect in investment, selecting of investments among the fund managers. Now, what is the cost of ESG in terms of returns to your investors? Do you think ESG compliant selection of stocks is able to provide better returns in the long run? What does the research and the evidence say about ESG?
Thank you for the question. So, when you look at from an E perspective, which is environment, S, which is social, and G, which is government, I think you can talk about short term, medium term, and long term, right? So and let's go backwards, because the G part of it is a very more I shouldn't say very short term, but more short term than the rest of them. When you have bad governance policies, when you have corruption, those type of things within the company, those can easily be discovered, and then you have regulators and you get fined, the shareholder value gets drops. So that happens more on a medium term basis. And I'm taking all of these things from a risk mitigation perspective. So G is one. The second one is the S part of it, was the social. If you don't treat your with all the different competition of companies that are out there and the activists that are out there in both in shareholders and in the community, if you don't treat your customers properly, if you don't treat your workers properly, and you don't offer the best to your community, and again, in the medium term, that's all going to catch up to you, and another company will either surpass you, or you're going to be again fined or doing something, or there's going to be a campaign against you from a shareholder activist perspective. And then the last one, which is the most long term from my perspective, is going to be the environmental part, where the risk comes in. If you don't have good policies, then you can make money for 4 or 5 years, 10 years at a time, and then one environmental step happens, for example, in the Exxon Valdez or the one that happened in the Gulf of Mexico, and you've lost shareholder value because of a mistake that was made, and you really realize that it was a policy decision more than anything else. So when I look at ESG, it's not about maybe creating alpha, which is excess return, but it's basically being able to lower the beta, and so it's mitigating risk, and through that mitigation of risk, going down less when the markets are going down, or not being able to get fined or those type of things, is actually equally as important to create that alpha in the long run. And I think that's where ESG plays a very fundamental role in being able to add value. And the earlier you adopt it, I think there are a lot of Islamic investment companies that have adopted it. The earlier you adopt it, I think the better your performance is going to be over the long run.
Right. Thank you. Now we move to the second presenter, Dato Jamelah. I may take pride in introducing Dato Jamelah as the one who brought her into Islamic finance, if I may claim that, because she was working for a foreign investment bank, and then I sort of discovered her and said she will be a very good person to come into investment banking and then Islamic banking. And she was the CEO of a bank when I was chairman of the bank in Malaysia in the early 2000. And Dato Jamelah has also the unique recognition of being the first female CEO of an Islamic bank globally. She's the first CEO of an Islamic bank globally, and she has been helping the Islamic finance, and now she has her own advisory firm. Dato Jamelah, can you take us through your journey of Islamic finance and where you are now on the board of one of the fintech companies, digital companies, I think. Can you tell us about your experience, how you have moved from normal Islamic into digital and what you see the future for the Islamic finance?
Okay. Assalamualaikum and a very good afternoon and Bismillahirrahmanirrahim. Assalamualaikum. Dato, I may just want to bring the audience back to where the evolution of Islamic finance, both in Malaysia and the world. Okay, what happened is that you're right. In the early 2000, I think there was this climax of Islamic finance in Malaysia, as well as globally, actually. More and more government were actually seriously looking at the development and acceptance of Islamic finance. Islamic finance was thought to be the growth sector in leaps and bounds and to catch with the conventional bank. Something like to a tune of US 3 billion is expected of Islamic banking assets globally. All right. So, and of course, Islamic finance has proven to be the least impacted by the last global crisis in 2008. Why? It's because of the product which Islamic finance actually offered, which is actually attached to real asset, and the underlying assets are forming the structure. So this we talk about what has happened in 2008, you know, based on that crisis of what do you call that? The one that Lehman Brothers and everybody actually fell off. So in some places, Islamic finance is called ethical banking. The reason for that is because we are less concentrated on high-risk transaction. So it makes it very difficult for us to actually increase the limit because of the fact that there must be an underlying transaction, not just on paper transaction. So in order to coexist with the longer existence of conventional banking, Islamic Bank, the bank that I used to work for, also we invested a lot into technology, into digital. We through software, we actually also provide online banking, mobile payment through apps, and also serve the digital market. We have, you know that banks, like Islamic finance, we have, together with conventional bank, has long introduced mobile and online banking. Gone are the days when we actually queue up to make payment or transfer funds or pay bills. Fintech has long been in the market through the evolution of ATMs, credit cards, and even online stock exchanges. And the introduction of internet banking and online banking eliminate some of the services fees which banks made in the past. So then once customer transfers, they actually need not actually use the checks. So this actually avoid the situation where there is bounce checks and also eliminates fraud. So that's the goodness about online banking and therefore technology. Better still now, we need not even carry our credit card. We need not even carry our cash in our wallet. We just use our mobile wallet. Maybe the luxury brand designer should think of to do a maybe wallet for a smartphone or wallet for the mobile apps instead of leather wallet. Maybe Louis Vuitton should think about that, or Gucci maybe. And fintech has also revolutionized the way people trade, the way people buy and sell goods, and the way people deliver their goods. This week, I can say this because I'm now involved with the SME markets. During the COVID crisis, there are more and more people in the SME market because they need to survive. They are actually turning into digitalization. So what they use is they use the big data, they use AI, blockchain, and edge computing to make financial services more accessible, okay, to their client. COVID has certainly changed the dynamic in the industry. Financial institutions around the world experience an increase in digitalized banking transaction and activity. The bank itself has to undergo digital transformation, increase automation processes, and digital structure to reach to the customers. Post-COVID, how Islamic Bank can assist in the recovery process of business. I think this is the topic that is actually very interesting. I felt that if there should be any banks that will be successful in digital banking, it has got to be the Islamic banks or the Islamic digital bank. The reason for that is because Islamic bank, as you know, we have social obligation. Yeah. So, most of the Islamic banks, I think because of the fact that we are newer compared to the conventional bank, our target market is usually the masses as well as the SMEs. And they are the people that are badly affected by COVID. Very much so. Some of them fall into the category of unserved and underserved as their capital become negative, and therefore they are no longer viable for the banks, for the commercial banks. So they are shifting their businesses from more towards digitalization in order to bounce back their business. Digital bank need to be fast-tracked as it can actually form, then it can actually focus on the social finance, where zakat can be used to solve immediate problem, because Islamic banks, as you know, they have to pay zakat, or they have to actually, the fees that they make from, let's say, late payment, they need to what do you call that, make it halal. So they need to actually now go and donate those money. So this can actually solve the immediate problem. But we are also looking at how we can move wakaf and endowment in order to provide long-term solution to capitalize Islamic banks, as well as to provide Islamic products such as musyarakah and mudharabah. Okay, where I think Islamic banks, the way I look at it, I mean, we are progressing very, very slow because of the fact that there has not been a global regularized structure or what do you call that, guidelines for Islamic banks to operate, because the practice in Malaysia and probably the practice in some of the GCC countries are quite different. I can say this because I work for both. I work for the Malaysian banks, as well as I also work for Kuwait Finance House, which is actually based in Kuwait. So I can say that there are certain Sharia issue which is actually very much differentiating, I would say, from what we practice down here. And I think we are more of Sharia compliant, but in Kuwait it's more of Sharia based. So things like musyarakah, mudharabah is something that the Malaysian banks would not be really very much involved. The only thing that we did, which we can call it the musyarakah, which actually I took pride in it because it was very successful, was the construction of pavilion. The pavilion, which is actually the biggest mall in Malaysia. Kuwait Finance took a position of equity in the form of musyarakah through a fund that we create called Al-Baitak. And we are actually the equity provider for that. And then the project is financed through Islamic finance facility by the commercial bank down here. So what I mean is that I think this is where post-COVID, maybe in order for us to enhance this capitalization, which especially the SMEs market are actually having trouble with, we need to think about how we can move this digital banking, crowdfunding, and maybe, as you said just now, robo-advisors. We don't have such thing for in the Islamic finance space to actually advise our customers what is best to do about it, because some of them just given up hope, and just the business just got folded, and all the employees got retrenched, which is a bad thing. We shouldn't allow that to happen. The government here in Malaysia is working very hard through the development financial institution to help all these commercial entities which actually are very much affected by COVID. But I think Islamic finance should actually do its part through the digital Islamic bank. So I'm very much involved into setting up this Islamic digital bank through, hopefully we'll get it solved soon. And we want to mobilize things like zakat and wakaf in order for us to help these businesses. Okay, Dato.
Thank you, Dr. Jamelah. And two things I would like to recollect. One is, of course, we don't have to call Islamic banking as Islamic, I mean, what's in a name? That which we call a rose by any other name would smell as sweet. That's what Shakespeare said. So whether you call it Islamic or ethical or finance, the gist is that we need to have a finance with a heart, that means we don't take advantage of the suffering population, like what the merchant of Venice did those days. So that is why riba is condemned in the Quran and in the religious books. And therefore, that is one. The other thing I like to recollect here is the success of Pavilion as probably one of the best finance Malaysia has ever seen. Because during that time, any Middle Eastern banker who comes to see me will say, if you have a deal like Pavilion, please let us know. We are very interested too. But there can only be one Pavilion. And unfortunately, even KFH tried with other modalities similar to Pavilion, but it was not as successful. So it depends on other characteristics as well. But Pavilion is certainly a very good story for Islamic finance, the success of Islamic finance. Now we'll move on to Dr. Muhammad Quresin. Sir, you are the only person I'm virtually meeting for the first time. Welcome to this conference. And we would like to hear your thing on crowdfunding. And you are an expert in the area of crowdfunding, and also you're head of microfinance. Please tell us your story on these areas and how we could move in future to develop Islamic finance in digital banking. What are the risks involved and what we could do better? Thank you.
Yeah, thank you very much, Dr. Wasiha, for having me here today. I'm actually working, I'm not a banker actually, neither retail nor investment. I'm actually a development economist working with an NGO. But nevertheless, we are using extensively Islamic social finance. I am the head of Islamic microfinance of Islamic Relief Worldwide, the large British Muslim NGO. We're actually not very far from Shakespeare's birthplace. So we're headquartered in Birmingham in the UK, and Shakespeare was born just in Stratford upon Avon, sort of about 20 kilometers south of Birmingham. So not too far. I also want to sort of link a little bit to what Dr. Jamelah said, and you said about finance with a heart. And I think, that's one of the things that we see very much really needs to be not just sort of positioned as an afterthought or something as Monam said, sort of, the gimmicky type of stuff that's going on at the moment, but really we want to position finance with the heart, at the heart of Islamic finance, if you like. I have a quick presentation just to give the audience a bit of a chance to sort of follow what I'm saying, because I'm not a banker and I might sort of use concepts and terms that are sort of slightly unfamiliar. But nevertheless, I think what I'm trying to do is a business proposition, if you like, not sort of ready for investment just yet. But I think the idea that I'm trying to put across could be very interesting also for the future of Islamic finance. So here we are. Crowdfunding is what you wanted me to kind of particularly shed some light on. And we believe very much, of course, that Islamic finance is not for the few, but for the many. And you see these women here in Bangladesh who are practicing Islamic finance, at the very bottom of the economic pyramid. And these are often actually forgotten, even by Islamic banks. And we have all, of course, in the sector, we all have, we're talking about CSR and corporate zakah, but actually as customers, we're not really looking at these poor women. However, through Fintech, particularly crowdfunding, we can actually make these women, bring them and make them part of the economic processes that are really, really important, of course, not just for their own betterment, but also, of course, for the economic growth that we need in the Muslim world with COVID, with climate change, and those massive challenges that we have, that we all face. Very quickly, what is crowdfunding? Crowdfunding really is the practice of getting a large number of people to each give small amounts of money in order to provide finance for a project, typically using the internet. So there's the technology angle. So, we don't necessarily need just the rich Saudi investor, but we can actually use the power of the crowd to really make and mobilize very significant capital. That's how crowdfunding works, basically. And there are different types of crowdfunding. There are sort of donation-based crowdfunding models, and there are crowd lending models, and also crowd equity, crowd investment models. But different types of business models, just to be clear, that crowdfunding is not just one thing. So there are different ways of mobilizing different types of money. What are the benefits? Well, access to capital. Crowdfunding is often used by individuals or corporate entities who do not have access to capital. There might be startups. There might be what we call in the development economic sector, the unbanked, etc., etc. It's a great way of marketing also your services, your goods. And it acts as a validation mechanism as well. You put your idea out into the internet, into the online space, and you will get immediate feedback. But there are, of course, also risks with crowdfunding. You're exposing your idea to that feedback. It might not really be very flattering at times. And also, of course, it does have a resourcing dimension. It's not necessarily completely free. And of course, if you fail in a very public way. So that's the danger, but also the benefit of crowdfunding. Using the crowd, having everybody give very small, lots of people giving very small amounts of money to make a big thing happen. And how big is it? Well, really, it's actually quite difficult to estimate. There was a very good survey in 2015 that looked at the global crowdfunding, so donations, loans, and equity crowdfunding volumes, and sort of estimated it at about $35 billion globally. Now that was 2015, so 7 years ago. Now it has grown significantly. It's very difficult because some of these spaces are unregulated, and also it's not necessarily so easy to exactly find out what is a crowdfunding type of venture. So there are no clear estimates at the moment, but we're looking probably at the region perhaps of an increase by a factor of 10 if we extrapolate from where we've started. So we're looking maybe at a region of 500 billion. And now that sounds very interesting, and that sort of touches at, of course, also the heart of Islamic finance. We are, bantering around the 1.5 trillion, 2 trillion, 2 point whatever trillion assets under management in Islamic finance. Crowdfunding is pushing towards that space. And of course, there are some Islamic crowdfunding ventures in this big sort of bubble as well. Just one here on microfinance. Microfinance is the idea of giving small loans to the unbanked, people who do not have access to bank accounts, but still might have an interesting business idea or still need to make, of course, a living and haven't got the money to set up a shop or a roadside stall or a little agri business, etc. Kiva is an American-based crowdfunding platform that allows you basically as a lender to select your own entrepreneur, your own micro business person anywhere in the world. You make a loan to that person directly. The person uses that loan over a tenure maybe of 12 or 18 months, repays that loan and gives it back to you. And the repayment rates are about 97%. And most of the Kiva lenders in the US or in the UK or Malaysia are actually re-lending again and again and again. So it creates a virtuous circle. And this has actually allowed Kiva to generate about $1 billion thus far over the last few years. So that's not, a small change. And there's a lot of good coming from that. Obviously, 80% of Kiva's borrowers, those small entrepreneurs that I spoke about, are women. So we have a lot of women participation in the economy through microfinance. We have a lot of people now able to invest maybe in climate change adaptation, maybe buy them some solar panels, for irrigation, or invest in perhaps seeds or, climate, resilient types of farming techniques that otherwise would not be possible. So these people are not just making a living for themselves, but they're also helping us to save the planet. And that's the power of microfinance through crowdfunding. And in this case, Kiva in the US. Islamic crowdfunding, this is a survey done by the Islamic Finance News. They found about 334 fintech companies, I should say. The red circle are the crowdfunders, and I just hone in on them. So if you look at these, zooming in, we've got about 30 or so Islamic crowdfunding platforms. These are Zakah, Sadaqah, Islamic social finance platforms, but also real estate crowdfunding platforms. So there are platforms like Yielders, for example, which is a real estate a platform where a crowd gets together, buys a house that they couldn't afford individually, and rent it out, or sell it at a profit. So that's the power of Islamic crowdfunding. And it's a growing space. As I said, it's very difficult because this is a space that's very dynamic. A lot of startups are coming into this space, and it's still a very diverse ecosystem, and not necessarily a lot of big sort of whales are in there just yet. But it's definitely growing, and also on the finance with heart side of things. So we've got a lot of Islamic social finance crowdfunding platforms here as well, and they're really critical. But it's not just about zakat and sadaqah. That's my sort of concluding plea to you, the business community and the bankers. Don't just think of Islamic finance as an obligation that you have either to pay at the end of the year, or during Ramadan, your 2.5%, or to give sadaqah. We heard, in other sessions about the Pakistan floods recently. There are, many causes that do need your sadaqah. But also, of course, I think it's really important to put Islamic finance, make it the finance with a big heart. And we're talking about the volume here. And what am I saying here is because we look at the world, at the Muslim world particularly, and we see, and these are the dark red band, these are the Muslim countries, OIC member states. Most of them have an adult population of less than 10 or 15% who actually do have a bank account. Now, if you're an Islamic banker, you should see those 500 million people out there as your future customers. And we, as social development organizations, we're happy to help you with that, because we put them onto that first rung of the ladder. We give them vocational training, we give them even microcredit so they can start their own business, but they still need you, and you need them, because those 500 million customers, that if the Islamic finance industry can tap into that latent demand, it can actually really find a new mission maybe, and rekindle perhaps that enthusiasm and that that energy that Dr. Jamelah spoke about, that we had in the early 2000s, where we thought this is going to change the world, and then we realized, well, banking is just going to be about making money for the few. No, actually, no. Islamic finance certainly should be about making, being there and being at service to the many. So this is why fintech, and particularly crowdfunding, of course, can also be, if you like, a democratization. I'm not talking about a political process here, but getting the many involved in the economic processes and into the financial system. That's really, of course, what Islamic finance should all be about, and really where its future has to lie. If it really wants to grow, it has to look at the masses and involve them through technology such as fintech or crowdfunding. Thank you very much.
Thank you, Dr. Mohammed, for your very enlightening exposure to crowdfunding and fintech, which gives hope for the future of the unbanked. In the good old days, when I was a young bank officer, our Bank Nagara, which is the central bank, was always caring for the unbanked in its own way, because if you want to get a license to open, those days we had to get a branch approval. You know, if you want to open a branch, you have to apply to Bank Nagara to have a license to open a branch in town A or B. And one of the criteria the Bank Nagara used to see was how many rural branches this bank had. And if we did not have enough rural branches, then Bank Nagara will say you have to open one rural branch if you want a license to open one urban branch. I mean, those were some of the ways in which Bank Nagara in the good old days helped to have the unbanked to be brought into the inclusivity of banking population. But now with crowdfunding, with technology, etc., there is hope that fintech and crowdfunding will be able to reach out to the masses. As much as we boast of Muslims as being 1/3 of the world, etc., but what kind of a quality of life we are enjoying is very important. And hopefully this will bring the future of the lower levels. In Malaysia, we call them the B40, the bottom 40% of the population, to be inclusive in the economic prosperity of our countries or globally. With that, I will now open up a little bit. We still have about 12, 13 minutes. So I'll go around to each one of you with some questions, and we'll start with Monem. Monem, having heard the three of you, how would you sum up the future of fintech and digital banking in terms of the Islamic finance area, and what are the hopes for the Islamic world, as well as it doesn't mean Islamic finance or ethical finance is only for Muslims. There was a myth in the early days of Bank Islam, which was the first bank in Malaysia. Most of the non-Muslims thought that Islamic banking was only for Muslims. That myth was broken after a while. Now a lot of non-Muslims bank with Islamic banks because they see the advantage of banking with the Islamic bank. So on that basis, Monem, if I could ask you to give a kind of a crystal ball assumption of how we could see ourselves in the 5 to 10 years with technology, AI, as well as fintech and crowdfunding, digital banking, etc.
Thank you very much, Dr. Vasir. So one thing I will say that my experience has taught is, both money and service are agnostic. And so if you can, provide a better return, give a better service, then you have the entire market out there to be able to be at your disposal, and not just, relying on the people that are extra religious or, those type of things. So I think from that perspective, you're absolutely right. We've been able to show that in the US as well. About 50% of our customer base is actually from non-Muslim or, just basic conventional investors that are looking for good returns, or even ethical finance or investing as well. So that's one part. I'm actually very positive about the future. I think, one thing that happens when you have efficiencies with technology is that you can, from the investment perspective, have smaller account balances and still be able to become profitable because your efficiencies are so well. And I think the same thing happens on the banking side as well. When you have this type of smaller opportunities, for example, microfinance is a good example, then what you get is you get the unbanked to be able to move into the world of finance. And I think that's a really important opportunity for us to do that. The second thing I think that the future holds, and I think we in Islamic finance can take advantage of, is also the democratization of finance as well. It used to be in the past that finance, because of the unbanked or the B40 that you're talking about in Malaysia, it was only either the wealthy or the larger companies that were able to get the financing that they needed. Now, as one of the panelists mentioned, Dr. Muhammad mentioned, with the use of crowdfunding and the technology, you can actually literally even the playing field and say that a person sitting, Joe Smith sitting in, a Mobile, Alabama, could literally fund a project that's based in Sarawak, Malaysia, right? So that's a democratization of it. from a perspective of the investor actually gets to diversify their holdings globally, and B is on the flip side of that is a person accessing money doesn't have to go to a loan shark or be exploited by anybody locally. They have the entire market open to them globally to be able to source that crowdfunding from. So I think from that perspective, I think it's a very optimistic for us. There are, of course, we have to navigate through this lens of not only riba but also gharar when it comes to all of these things. But I think with the help of scholars, I think it's very, very possible for us to get to that level where we're providing not only an economic benefit to society, but also a social benefit to society.
Thank you. Dato Jamelah, could you sum up your thoughts?
Okay, I think the way forward for Islamic banking is really going into digital. As it is, I think this actually will serve what we call the borderless banking, because what happened, as you said it correctly, through crowdfunding, right? You can actually have a project in Malaysia and it can be actually invested by people who are based in the Middle East. I mean, we did that for Project Pavilion, but it was not through digital banking, of course. It was through our normal banking. But seriously, it's people who sits in the Middle East who doesn't even know where Malaysia is, are the one that actually invest in a project in Malaysia. So now we are just making it into a platform which is much easier, which is digital, which everybody now can actually invest in that, big or small money. And one of the other thing, of course, is that it will also shift the social obligation because for the government. Because what happened is we are now mobilizing what is the essence of Islamic banking, like zakat, like wakaf, like the concept of musyarakah, the concept of mudarabah. We need to mobilize it in order to provide a real Islamic banking. But of course, it's a tough call for the regulators because I think they need to actually now look at how this Islamic bank is going to actually work in parallel to the conventional bank, as well as now we have got the digital bank, which is also sectionalized into the non-Islamic and Islamic. But I think they need to come up to a conclusion that, as you said it correctly, Islamic finance is just not for the Muslim. It's actually for everybody. It's actually meant to create this social obligation to everybody so that we actually can perform better and we don't have an issue about, should there be any crisis that people actually go on hunger or people fail their business and people went out of job. So this is actually a big thing, as it is. I think I like to reiterate what my Sharia chairman said. Islamic banking is banking with ruh, not just heart. So ruh is like heart lah. So so you must have that what do you call that, patience. You must have that that wanting to help others. You need to do that. Then I think we don't have this issue. Should there be another COVID struck us, we have it made because we have crowdfunding, we have the fintech, we have got AI, we've got robo-advisors, all done through digital banking, Islamic digital banking, inshallah.
Thank you. Dr. Muhammad, your concluding remarks.
Yeah, thank you. I mean, the outlook is very interesting because some people say actually we won't have banks. Maybe it's a slightly controversial view in this setting, but maybe brick and mortar banks will be something of the past very soon. Because the middleman and middlewoman in this case, obviously, Sister Dr. Jamelah, obviously, is of course, taking a cut out of the process. And Mortar spoke about, and I mentioned the idea of democratizing finance, and people will ask the question, what value do you add? And again, however, there is, of course, another opportunity for Islamic finance to come in and say, our business model is different. Our value proposition is at the core very different. And Monem said, of course, money is agnostic. The problem, of course, is that money has no morals either, right? It has no faith and has no morals. And of course, we have to step into that void and say, by the way, money has no morals, but of course, those people who you entrust with dealing with your money, they have to have morality. And we see a lot of the regulators now particularly paying attention to ethics. So there are requirements, around senior management regimes in banks where, of course, people have to be trained on ethical standards, will be, of course, held to account. Also, in criminal law, if they fall short ethically, and that's really an opportunity for Islamic finance, or whatever we want to label it, to come in and say, by the way, yes, money is just a tool, but those guardians that you entrust with your money, you want to make sure that their ethics, their morals are in the right place. And then, of course, we can also, utilize to much better effect things like robo-advisory. The idea of robo-advisory is very appealing to consumers because of maybe that distrust, right? That bankers, unfortunately, you mentioned the Lehman Brothers, that bankers have earned themselves, in the global financial crisis. And again, if you now look at the markets, the financial markets, and the way that, some of the deals are happening, you can see again that actually the banking sector broadly hasn't really learned very much from the global financial crisis. Governments will bail them out. They are too big to fail. But the power, the revolutionary power of fintech, democratizing finance is something I think that bankers have to be aware of. They're already starting to harness it, and Islamic finance should be really well placed to actually step into that gap and live up to those high ideals that we all share.
Thank you. I think time and again, Islamic finance and Islamic products have proven the resilience of downturn or financial crisis. They have survived much better than conventional banks. As you all said, the brick and mortar banks, we don't know how long they will be surviving. The way forward in future could be digital banking. And as long as Islamic banks are well prepared in terms of technology, human capital, and well prepared to face the future, I think there is hope for Islamic finance to flourish. And we should develop the finance, not only with technology, but technology with a heart. With that, I thank all of you for participating in this great session. And we look forward to you physically, inshallah, next year in Malaysia. Thank you.
Thank you so much.
Thank you.
Okay, Assalamualaikum.
Thank
Assalamualaikum.
you.